We are back. Welcome, everybody. Hope you guys are all having a fantastic day today. We recently just bought a new stock for our trade, so let's go. I hope you guys all enjoy it. If you guys do, like, subscribe, do what you guys do. We're going to be talking about entry points, exits, risk management skills, why we bought this stock, so like, subscribe. And if you guys want to learn more about swing trading, strategies, the approach, how to find these undervalued stocks, check out our school. We have our Black Friday sale going on for 51% off, which is the largest sale we've done. Code Black Friday. So check it out. Private live streams, quizzes, lectures, group chat, but more importantly, right, teaching you to trade, not a get rich quick scheme, not alerts or anything like that. Honest strategies that I use. Check it out. And guys, let's turn to the computer and let's jump into this here. So the first thing here, guys, is what are we using? So the broker I am using is MOOMOO. I know a lot of people always ask me about it, and I talk about them all the time in all my videos, but they're awesome. You know, they offer great charting, scanning, but more importantly, they offer this risk management tool that we'll talk about here right now. So why did we buy this stock? I drew a blank. So looking at this trend, what do we notice, right? What do we notice here? So this stock here was trading and hitting this 90-day moving average line a bunch of times, right? Hits it, got good buying pressure, right? Hits it again. And, you know, the last thing you want to do is just only buy a stock because it hits a moving average line. You know, one of the things here you got to look at is something called the RSI, which the RSI was trading for about a 31. You know, the last time it was trading for a 31, let's zoom out, was all the way back in about here, where we saw the stock go from about $35 to about $40. And previous to that was in here where we had some good moves there. So, you know, looking at the RSI will help get a general idea, you know, if the stock's going to continue to sell off. So, you know, one of the things here as well, you know, we do have, and you gotta understand this as well, we do have a little bit of some resistance at that yellow mark, because these moving average lines, they act as support and they'll also act as resistance. So when the stock's above it, right, you guys can see they act as support. When they're below it, you can see where they almost consolidate here a little bit longer, right? So we could see a little bit more consolidation. But anyways, going back to here, all right, why did we buy it? So we bought it because of the 90-day moving average line. We bought it because of the RSI, and on the hourly time frame, we had this nice breakout here of the 90 and 50-day moving average line. You guys can see this nice move right in here where we saw this stock get a huge amount of buying pressure to push its way up. You know, and the last time it did that, let's go ahead and find in here. So the last time it broke up through it was back in here, where the stock went from 72 to 83. Previous to that, right, was in here where the stock went from about 71 to 72 and rallied up to 75. So, you know, every time the stock does that, it's always a good thing for the stock. Also, you know, looking at this here, entering here, you know, at like that 78.50 mark, keeping our stops below here, right, below there. For a possible push, obviously up to this, we easily could see, is about a 1-to-1 risk and reward. But honestly, I think if we can get a push up above that 200-day moving average line, which is that red line, I wouldn't be surprised if this thing squeezes up back up to like $89 or $90 a share. You know, and that's a 4.5 to 1 risk versus reward. And this is why I love MOOMOOs, because they have this tool. So now you can go ahead and you can plug in, you know, some information here. If you're starting out with $500, you know, if you can do this once a week, risking in this circumstance 3%, you know, 4.5, even if your win-loss is 40%, so you win 40% of your trades, look at what happens, right? Over the course of a year, guys, your return on investment is 455%. So that is why having good risk management, understanding your entry points is so incredibly important, guys. So, you know, the biggest thing with this type of approach is to practice it, because it's not easy. We talked about it, you know, simplified, but more importantly, if you're watching this video and you're like, all right, I want to start trading, paper trade, learn. and spend a year to just learn and practice your entry points, and you'll be in a great spot, guys. Hope you guys all enjoyed it. Like, subscribe. We'll see you guys in the next one. Hope you guys have a fantastic rest of your day. And guys, we do have 2 new channels for the team. We have digital media, which is how to make money online other than investing. So check that out. And we do have a credit card channel. So check that out. I'll put those down in the description so you guys can check them out. But hope you guys enjoyed it. Like, subscribe, and we'll see you guys in the next one. Take care.